Hey, good afternoon. What is it? It's the 18th of January, 2024, Thursday. And here we are. We're either in the eye of the hurricane, not much going on, or it's about to, or we're into some doldrums for a while until BlackRock gets their ass in gear. But we'll discuss all that stuff later. Good to see everyone. We still got lots of people coming in. Giandrea, Core. Again, if you have any questions during any time during the call, just post them in the Q&A section. You'll see on the right-hand side, and we will get to some questions later on in the show. So let me just go back here. Geez, I gave you a sneak preview. Everyone got a sneak preview of what we're going to talk about. Well, you might as well email. So I guess it wasn't that big of a secret, but yeah, good stuff. Good stuff. I think despite the lack of crazy volatility that a lot of us were expecting, a lot of people were expecting, and a lot of people were expecting nothing. I think we've been pretty happy across the spectrum of the accounts that we manage. I think we're all doing pretty good. We're just soaking up the theta right now, but I think we are generally aware that and I actually said to you earlier today, Richard, I sat down at the computer this morning. I felt very comfortable, and that's always a warning sign to me.
That's a terrible bad sign. Yeah.
Yep, terrible warning, and I've learned that the hard way. So I'm now on guard. Okay, so a few more people rolling in.
I'm letting a lot of risk roll off my book at the moment. I'm keeping some skin in the game, but yeah, I'm sort of allowing myself to be earning maybe 50 basis points of NAV as theta, but no more than that at these levels.
Yeah, I think that's a smart idea. Yeah, something's going to happen sooner or later.
And keeping all that very short dated as well, so I don't suffer from a big Vega hit if the market does move.
Yeah, and we did have a bit of a move. Must have been earlier in the week, maybe on Tuesday. It must have been because Monday was a holiday in the U.S. Tuesday woke up. We did have a bit of a move, and I did adjust some positions from last week, and I'll show you guys all that in the charts here in a moment. Some of the updated positions, not all of them, because I don't want to talk all day about that. But what are we talking about today? Well, we are going to do a market analysis, talk about some trades, some strategies. And then the topic that we're going to get into a little bit later on is something interesting because there was a lot of very disappointed people when the CTF news came out and not much, the approval came out and not much happened. So the question is will these ETFs sort of spell the end of this Bitcoin volatility that we've sort of gotten used to the last couple of years? So that'll be an interesting topic. But before I get started, a couple of things in the chat. You can see there's a link, a Deribit link there if you want to save 10% on Deribit fees. If you do not have a Deribit account, well, do us a solid and you can save yourself 10%. And of course, we're the Rogue Traders. I'm Shane, my partner Richard. We're the founders of RogueTrader.academy. And we do all kinds of stuff during the day. We do live streams. We do interactive real-time trade alerts channel. Weekly Ask Me Anything calls, educational content, all kinds of fun stuff. So check out the links here. You can find us on Patreon. We're not on OnlyFans yet. I keep saying we're on OnlyFans, but it's like been a month we're trying to get approved. It's ridiculous.
Oh, I can't get through their what's it called? The address validation. So I've got an Android address on their database won't accept it.
So just join us on the patreon.com for now. And, of course, you can always visit us at RogueTrader.academy. All right, so let's go back to the good stuff here. Actually, why don't I just jump in? I'll share my screen, and I'm going to show you my charts. We'll probably you see the charts there? Great. Okay. I got ETH up here to start with. I don't have any trades on ETH. It's the most boring chart in the world right now in terms of a major cryptocurrency. I mean, if this was an equity or something, okay, fine. But it's boring. And I was really struggling to make money in ETH for the majority of this year. And I haven't a position on, I think, since November, waiting for it to do something. And I think ETH will have its day. I don't think it's a dead duck or anything. I think it's just kind of doing its kind of thing in the background. Fine. Let's go on to Bitcoin now. I have in the blue here is the same trades I had on last week. I haven't changed anything with this here. Let me scroll out so maybe that's too much. That trend line makes a little bit more sense up like that. We have Bitcoin pull back, on the big dump. And, it basically hit the trend line. It stuck to it. It's a little bit below it. But, these aren't exact tools. I just randomly drew a line on there. So one could say it's sticking to the trend line. One could say, maybe it's just a little bit below, more likely to drop off. Whatever, it's close to the trend line. So I think it's almost a 50-50 gamble here. And Richard's got some thoughts on that later that he'll share for sure. But the blue is what trades I had on before. Basically, when this after this big drop last Thursday, I had these trades on. So I had some put spreads, 38,000 and the 42,000, and I had some call spreads. Actually, sorry, no, this was my bad. I've lost track of time. This was just before the big drop. I put those on, wasn't it? Yeah, that's right. Because this big drop happened on the news. Because I got lucky and I sold the 55 call spread just before the big dump. And I was like, oh, hey, lucky on that one. But I did sell the 42, 38. So what did I do? Well, I those started to come under pressure here. We had some of these wick downs and I felt, you know what? The 42s were getting close. Actually, I dipped below 42, I think, at one point. It dipped down to like 41, 600 or 800 or something. So I thought, I'm going to roll some things out. So I did roll some down to 40,000 and 39,000. Same expiring tomorrow morning, 40,000 and 39,000s. Some of them I did as a 1x2. So I rolled down 2 for every one, to make up the difference because I don't want to do it at a loss. So I did it at a slight credit or a flat trade or close to. And I also strangled some out. So as part of rolling some of these down, I also sold some 45,000 calls when I was down here. Those will expire tomorrow. Now, some of these things, I had the 40,000. I actually don't have these 40,000s anymore. This is a little bit of a lie. I did decide to take care of some of those just, I think, on Monday. We had another dip down. And I thought, you know what? I'm going to roll some of these out to the 26th. So that's what I did. So I actually, if I hover over here, I've got some 26. No, I had some 40,000 existing before. They're still there. 38, 37, 36. So I basically smeared them down underneath 40,000 puts. And I also put on some fresh ones. These weren't part of a strangle, but 46 and 48,000 short calls, Jan 26 on the little spikes, just to balance things out and to get some theta from both sides. Some of it, a little bit of it, I did push out to February 2nd yesterday, just because it made sense. The numbers lined up, but it wasn't a lot, and it wasn't really worth mentioning. But I'm pretty happy with that. If we continue sideways for the rest of the month, which is kind of what I'm hoping will happen, and you never know, it might happen, it might not. That's going to be a boatload of theta that I'm going to be shoveling in. So I'll be clearing those off as they get deep, as they lose their intrinsic value. And so by Feb 2nd for sure, which is what's that like 2 weeks away. I'll be pretty light on short positions. So lately I've been selling a lot of, and I don't have it on here because I don't want to have this. Looks like someone threw paint across a portrait. I do sell a lot of the 3-day strangles right now, or iron condors in a lot of cases. Just to let everyone know, all these shorts, every single one of them, I have cover for. Sometimes I'm over covered. So for all these puts, they're not just naked puts. I have, and they're smeared. My long puts are smeared all the way down. And sometimes in the morning, I'll just pick them up cheap, as the price is bouncing around and sell against them, or I'll just buy them super cheap at just different times and different opportunities. So not always on the same date, but usually on the same date, I'll have full coverage. But just so you don't think I'm just out there selling naked options all the time, I'm usually not. So that's what I've got going on. the last couple of days has been really nice as we're getting closer and closer to the 19th. Of course, all that intrinsic value is coming into to the account, so the equities have just been going up and up and up. It's really been quite nice. So I got to knock on some wood, because whenever you say something like that, you're cursing yourself. So I'm pretty happy just to sit tight and wait to see what happens. My perfect world, my perfect little bubble wrap world, we're going to keep going sideways for another week or two. I'm going to realize all that intrinsic, and then we're going to have a massive move. I'm going to jump on that. Of course, reality will never work out that way, but that's my hope. In the meantime, I'm just going to reduce risk and hope to see what happens. And I think a lot of our discussion today is going to talk about where we go from here. And I don't know, Richard, if you've got anything you want to share, or you want to share your screen, you can't hear. I'm going to turn this screen share off because I don't think I need it.
No, it's been pretty much the same for me. I'm happy to selling 3-day condors, and or at least I was until today when the vol was so low, and now I'm not so happy about it. I will never sell vol below 40, and we're currently selling strangles at 45 vol. It's absolutely in the limits for me. So I'm keeping it super short dated and expecting to get hosed in one direction or another, and having to manage it at some point. In the meantime, I'll pick up a few pennies.
The lovely thing about selling the short dated, if you do get hosed, you've got so many options to roll it to. One day ahead, another day ahead. It's not like you have to push it out a month or two or anything crazy, and you can usually dissipate that pain quite quickly.
Yeah, if yeah, and in fact, if you do get a vol spike, so currently we've got overnight vol at 40, 42-ish. That's actually probably higher than the much higher than the realized vol. We're probably realizing more like 20 vol in the market at the moment. So it's probably still correct to sell it. If we do get a move and have to manage it, that at the money vol will go up to sort of 50 or maybe even 60 if it's a big move. And that means that the 1 week, 2 week vols will be up to sort of 58-ish, and there'll be loads of premium there. So there'll be lots of space to roll into. So as long as it's not, don't make the positions too big, I'm happy. So right now I'm just happy to receive 50 basis points of NAV of my PV. That's right, as theta overnight. It's a rough guide. It still makes shed loads of money if it all gets realised, but I'm not expecting it to get realised. I'm expecting to have to roll it. But in the meantime, I'll see if I can make it, a couple $100 a day.
And I'm just taking a look at the D-vol here, and it's really, really been crushed in the last day. I mean, we're down at about 47.5.
Yeah, I was reading a note from one of the dealer brokers that the big call overwriter that was overwriting calls on Ethereum before Christmas, they disappeared when the vol spike happened. They've come back selling thousands and thousands of calls on Ethereum, crushing the vol.
Interesting.
And I think, going back to the topic of our channel today, our talk today, will BlackRock ETFs crush vol or not? Well, so far they are. In fairness, we did have a vol FOMO, before the launch, before the SEC decision. So we've had a retracement back from that FOMO, but we've retraced back actually further in vol.
Okay, and that's so you think the vol crush is you think it's more BlackRock than just lack of interest?
Well, look, this is what I think at the moment. The only while Bitcoin is touted as an alternative financial system that doesn't have central bankers interfering with it, in the end, in 2001, the only thing that mattered to the price of Bitcoin was Elon Musk and whether he was buying or selling it. And in 2024, the only thing that matters to Bitcoin prices are the ETFs buying or selling it. So currently we're seeing money being rolled out of, sold from Grayscale Bitcoin Trust, and a chunk of that money being reinvested into the lower cost ETFs that have just come online. And when I use the term BlackRock, I'll use it as a proxy for all the other ones because I'll forget otherwise. The big question now is, well, are the inflows into the new ETFs going to equal the outflows from Grayscale? And also, is the extra inflow into the ETFs going to serve to justify the 10% funding cost on Bitcoin at the moment. So right now, on Deribit, you could buy Bitcoins and sell futures, and you could earn 10% yield on your dollars. So it's an obvious trade, right? So there's still enough people long futures who are willing to bear that cost.
How much longer, I wonder?
And the question is for how much longer. And I suspect for how much longer will depend on up until the first sales report or whatever they do that BlackRock comes out with to say this many billions into the fund in the first week, and with particular reference to, well, how much of that was recycled from Grayscale, how much of it's new money, right? So the question is, how badly do the general public want Bitcoin? And my guess is initially not that badly, because people tend to need to give people time to make a decision, and they'll go through the motions of reallocating, and that takes time, and so give it a month to decide. By that time, Iran and Pakistan could be in full-scale war with each other, given recent events. Anyone else could be at war with each other. There's a million other things for the market to worry about. So while in the minds of Bitcoin enthusiasts, this was the biggest news of the century, in the minds of everybody else, it's completely inconsequential, in my view. What will make it non-inconsequential is if we manage to pump the price of Bitcoin up to the point where nobody can ignore it anymore. So we've got above 60 again, and people go, it's Bitcoin doing its bull run again, or we get not enough money coming into BlackRock, and therefore all the future sellers unwind, and we get a cascading event, and we sell back down to 30k or 25k. In which case, the mainstream news will be all like, told you so. It's a big scam.
Yeah, it's interesting because we had when we started the Rogue Trader ZigDAO fund, the publicly trading fund, we wanted to start a fund that was a retail size account just to show what we do. We started November 1st, and that's basically from literally we opened the fund, and we're not long. We don't go long options. We sell. We had a 30% run up, 30%, and that was all the front running for this ETF stuff. And it was kind of expected that it might happen. You didn't really know at the time, but it happened. And there's a big argument saying, well, you know what, if this turns out to be flat or not that interesting or not that appealing to investors, or there's 100 reasons why it might not sell as well as people think it's going to sell, that entire 30% should disappear.
Yeah, just to put that into perspective, that front run is worth, that 30% increase is worth about 200 billion of market cap. So we better see 200 billion coming into these ETFs to justify that price, assuming that the previous 27k was the right price for Bitcoin. I mean, look, Bitcoin is a whole exercise in price discovery of something that's completely nebulous and produces no output. So what is the price? No idea, right?
Some people are going to say zero. Some people are going to say $1 million. It's really that polarizing.
Yeah.
So it's like talking politics with your family at Thanksgiving. Just don't do it.
So then to your question of what does this do to volatility? Well, I think for now the only thing people are looking at is what are BlackRock doing, and so that means that we all do nothing. And we're all starting to get a bit comfortable with the fact that the price isn't going to go to the moon. So we're all selling vol, selling calls particularly. You can see that in the Deribit metrics. So sooner or later, we're going to sell too many calls and make it too tempting for someone to push the price up and scare everybody and cause a vol squeeze. Probably getting there in the next couple of weeks, I'd have thought. Give people time just to get over their fear, and forget what happened in October, and they'll oversell calls for sure, because people are always hungry for yield. And then long term, well, if the quantity of money in these BlackRock, etc. ETFs is now going to become large, the sentiment of everybody on Wall Street, for want of a better word, or Main Street, or the spare savings they have, or whether their need for cash starts to dominate the price of Bitcoin. And so then Bitcoin's going to become, simplifying, a proxy for the availability of cash, really, and also the availability of other assets that are inflation protected, and maybe or maybe not have a yield. And that, to me, sets us up for wild swings in price that will make no sense to the Bitcoin world, because it'll be driven by the mainstream world. And that could mean that you get long periods of it doing absolutely nothing, followed by massive price swings, like halving or doubling, which will confound everybody. And it'll be bad for everyone, because vol sellers will make no money selling vol and then gets completely hosed when it moves. Vol buyers will just get bled dry, and then if they're still left in the game in 6 months' time when it does move, they'll get paid, and they'll wonder whether it would be like the episode in The Big Short where the guy makes everyone money, but no one thanks him for it, and it was a horrible experience. I think there's a danger that it gets like that. So I think so. In summary, I think less volatility followed by more, which is what none of us want.
Yeah, and I don't know how that's going to play out, and you could be right, but I do have a feeling that for overall volatility, now that Bitcoin has bent the knee to the U.S. regulators and to the TradFi world, it's not going to be. It might end up being. I agree. We could trade gold, we can trade the S&P, and it gets pretty stabilized and pretty smoothed out. But then you get these weird spikes, these big things, and they kind of cause a panic, and people adjust. And I think that's what's going to happen to Bitcoin. It's just going to become like a kind of a mainstream tradable asset that and maybe it'll take 2 or 3 years for that volatility range to just narrow down and join
With the exception, of course, that Bitcoin itself is not a regulated asset, and so somebody might decide to get long a bunch of IBIT call options, say, and then go and announce to the world that they just bought a load of Bitcoin and cause it to spike 20%, and cash in on those IBIT calls without having to actually spoof around with the options market in Bitcoin. I think it's added a whole second and third dimension to the Bitcoin price that hasn't been widely anticipated.
And so I do agree. We're still vulnerable to shenanigans that you simply can't do on the S&P.
It's more because previously Bitcoin was vulnerable to market manipulation, but you could only benefit by the amount of liquidity that was in the Bitcoin market, which was at max 200 million. Now you can do shenanigans on Bitcoin, and what's at stake is all the money that's in ETFs as well, which could be in the end hundreds of billions. And so actually, there's kind of much more leverage behind the incentives for shenanigans get bigger by bigger people.
Well, maybe we should plan some of our own.
Well, yeah, if we had the ability to, if anyone out there has got a credit line for a couple of $100 billion that we could use, I'm sure we can make a good return.
I'm sure our regular viewers, we can put together enough money and we'll buy our own island somewhere. I know it's interesting, and there's a few different trains of thought on this. I don't know. I still think we're going to have some great trading opportunities for the next few years. But eventually, I think it's if Bitcoin survives. I don't even know if it will necessarily. When we're talking 5-10 years down the road, I don't really know if it'll be. We'll tell our grandkids, I used to trade Bitcoin back in 2020. And they'll be, really? Tell me more, Grandpa.
Like tulip in the 17th century.
Yeah, that's right. Yeah. And I think that, that is the way it has to go. Like, it's not going to stay this crazy volatile thing forever. Eventually it's so many things can happen. So I think that it's good what's happening with regulation, but it's also bad. But we see, we don't want to call it manipulation. We don't want to call it by these names, but we see it. We trade it every day. We see price levels and shenanigans happening, and you see it in TradFi too. Go on. Let's not kid ourselves. All kinds of shenanigans happen everywhere. Just a bit easier to do in Bitcoin.
Well, I mean, the whole industry of HFT, high frequency trading, is all about shenanigans, and those high frequency trading bots do stuff that you'd have got told off for in the 90s for doing, but they just do it continuously all day long.
100%. I remember when I used to prop trade, and we'd be on the floor, and somebody would be crossing the market, like crossing the NASDAQ, just with a bid, crossing over the offer, doing things like that, or putting an offer in and taking out, putting an offer in and taking out, like just do, rapid firing. We get a call. We would get a call from the SEC within 10 minutes, screaming. It was some idiot, what are you guys doing? You're going to lose your license and blah, blah, blah. And then it just became normal. Yeah. And nobody said anything. Nobody said a damn thing. And anyways.
Times are changing, old timer.
Times are changing, yeah. Let's see here. We got some nice trading setup, Shane. Antoine, I'm not sure if you're being sarcastic or not, or if you're being on point, because Antoine and I like to joke. He sends me messages. Branko, we will soon see options underlying by the Bitcoin ETF. Yes, we will. And in fact, I was doing some Googling the other day to say, I was asking Google, like, when do options start trading on ETFs after launch and things like that. I didn't get an answer back. I've been kind of out of that ETF world for a while, so I'm not really sure how long it takes. Does it take 6 weeks, a month, 6 months? I have no idea. But I imagine those IBIT options will start trading. Like if you go to Yahoo Finance and you type in IBIT, you'll see it. There's the options tab there, but there's nothing populating it. So it's set up for it to be there. Will those be worthwhile trading? Maybe. Who knows? The only problem I have with trading the IBIT options is that, it's what are the IBITs worth? $20-something. I've never enjoyed trading options on low valued assets. I always preferred an asset that was in the hundreds or the thousands, my trading style. But
I don't mind. I made a bit of money on Smith by trading Smith & Wesson options after the school shooting in about 2011, 12. Because their stock price initially dipped and then went up. That was went up from $8 to $11. I made a bit of money on that.
Yeah, I mean, and the obvious answer is we'll just increase the amount of options you're trading. And yes, that's true if you want to make the same premium. But I guess I just enjoyed the price action of the smaller, of the larger caps.
There'll be an interesting dynamic between IBIT options on CME and Bitcoin options on derivatives. Yes. Because that's they're correlated markets, but they're not linked, and it's very I think interesting, right? Because there's no way for one to affect the other one in terms of price, because if the price of the ETF trades at a premium to the underlying, it doesn't really incentivize them to do very much. But that'll be interesting. I think there'll be an interesting correlation trade there.
Yeah, and it's like, on the equity markets, there'd be smaller regional exchanges which would trade an asset that was trading in New York or Chicago or something, but they weren't actually linked. So literally there's great arbitrage opportunities, but they were always on the horn with each other. It was back in the day before they became linked. And you're right. And I think this might be a good topic for a future episode once we start to see that data and to understand it. There probably will be great arb opportunities for a period of time until that vacuum gets filled. So it will be very interesting to see how those options are interrelated. Let's see. Do we have a question here? Yes, we do. Question from Paul. Put my glasses on. Is it worth having Bitcoin long calls at the money for June at this point? Oh boy, that sounds like an investment advice.
That will completely depend on every other position you've got. If you want to be long vol in June, yes. If you want to be short vol in June, no.
Yeah, and if you're very convinced that, hey, this is just slow, it had to go through this period of time, but we're going to gradually grow up or go up as more and more fund institutions start putting money in. So we can talk factually about that, as opposed to whether it's a good idea or not. If you buy long calls at the moment in June, you are effectively buying the carry. You're having to pay the carry.
in interest in that price. And in June, I think the skew is neutral, so you are paying carry to own that position.
Yeah. And just so we're clear, when Richard's talking about carry, I mean the premium of the options has that futures built into it. It's got that pricing built into it. So you're going to pay one way or the other, I guess, is what probably a good way of looking at it.
Whether you buy the call or buy the future, you're going to pay a carry. Yeah.
And you know what might be an idea, Paul, and this is what we teach a lot of our students, is hey, you know what, I really think this thing's going up beyond its new highs, and I'm going to buy some at the money or some 50,000 callers or whatever you happen to buy. Well, you can always do these things as diagonals, right? You can set up these spreads, or maybe you'll sell short dated in order to pay for that long dated, and you'll do that for 1 or 2 months, and it'll pay for that trade. So that when we get to May or something, it's basically a quote unquote a free option at that point in time. So there's ways you can do this so that it doesn't just cost you, or when you see a good opportunity, a good spike up, you think it's going to retrace, sell some calls, pull some premium back, and help pay for those long June calls.
As for whether I think the market's going up or down by June, I have absolutely no idea.
Yeah. Me either. It almost seems like a crapshoot. And like you said, what it might depend on is what are those sales reports going to look like for these ETFs?
Absolutely.
Is there a lot of them? Is there more than expected?
Right now, that's only showing 10. Right? Is money coming into Bitcoin or not? At least now we've got a way to document it. Well, actually, we've always had a way to document it because we've had Glassnode and all the rest of it monitoring the exchanges. In fact, now it's a bit more obfuscated a bit. We'll wait and see. We'll probably see after the first monthly report how much money came in and so on.
Cool. All right, we've got a question here from Hele. Sorry if I pronounced your name wrong. Question about Deribit option payout. It's cash settled but paid out in Bitcoin. So let's say Bitcoin's at 50K. I sell a 20K put for 0.01 Bitcoin, $500. Price is 25K at expiry. So the $500 premium I earned is paid out as 0.02 Bitcoin now. No. You will receive the premium as cash straight into your account, and the value of that premium will have halved in the scenario that so the premium you received is actually 250. If you want to hedge into dollars, as we call it, you must sell perpetuals or futures at the time that you do the transaction to the value of the premium that you've pulled in order to hedge it. And it's worth doing that, by the way, because then you're earning carry on that trade. So that makes selling puts on Deribit fraught with danger unless you are short futures or perpetuals. And I was just going to say that's one of the problems with selling puts is it's kind of, you get a double whammy. If you're really getting pressed and the price is diving and you're having to roll, and it's like, oh man, your equity is getting chewed up, but you're also, the value of Bitcoin is going down, and it really sucks.
Yeah, so if you've got to make a choice. Am I trading in dollars or am I trading in Bitcoins? If you're looking to accumulate Bitcoins, then obviously you don't hedge the downside. You just sell premium and accumulate it, or buy strategic call spreads to pick up swings, and don't worry about it. And if you're hedging into dollars, then you need to be thinking about your delta all the time. And the easiest way to do that is to obviously adjust your short futures or perpetuals position each time you trade in order to maintain your hedge against the premiums that you've pulled in and the cash that you're holding on the account. You can run a delta beyond that, but you want that delta to be thinking in terms of hedging into dollars, not Bitcoins. I think Deribit soon going to be launching linear options on Bitcoin. I think I keep saying that.
I've heard that as well for some time, but I haven't heard an update on.
Which will kind of make it easier, because then you'll I guess you'll be able to collateralize in USDC and just trade options as if it was the S&P.
Yeah. Dom had a comment too. This is all this kind of stuff they said in 2013. Who knows what will happen? I guess just referring back to our previous conversation about the price of of Bitcoin and all that stuff in volatility.
Well, I don't know what was the situation in 2013. That was at the birth of Grayscale. I guess everyone was arguing about that. It's a fair point, right? So if the Grayscale has existed all this time, so actually, why do we think that the existence of BlackRock ETF will attract more money, unless it's going to attract money from pension funds? But I don't know. So how many pension fund managers are going to risk their careers by, hey guys, I've got a great idea. Let's buy this Bitcoin thing. I don't know.
Yeah, it doesn't give a dividend and it doesn't pay any premiums, but the
age timing is really good. Yeah. And I'm glossing over and making light of all of the strong cases for a non-inflationary global currency that's not controlled by a government. I totally get all of that. I'm thinking more about how a career-minded fund manager sells this to his the board of directors who are going to fire him if he's wrong. No one ever got.
All right, I think that. Yeah, cool. Well, and so do we think that the volatility, I guess, to finally answer the question, to end the call here, and I don't have a poll question today, is do we think it's going to destroy the volatility of Bitcoin? Well, you seem to think that volatility is going to shrink and then have sudden expansions based on different news-driven events and things. And it could be this erratic, goofy ride going forward. I don't think it's going to get killed and crushed and then be a practically non-tradable asset, but I don't think we're going back to the old days of massive moves up and massive moves down regularly all the time. It's going to be a bit more constrained. And for some people, it might be easier to trade. For some people, it's going to be worse. Really depends on the style of trading.
We've got a very public benchmark now, haven't we? Which is, what are the rates of inflows and outflows into the BlackRock ETF? And so given that that's the only trade in town now, there's no reason to get excited or terrified over the price, unless the investors in the ETF do something terrifying.
Yeah, and what Bitcoin is going to be, what's going to become, at least for some time, is like you said in 2021, it was what's Musk going to do, and the market would move 10% one way or the other. Now it's what's BlackRock going to do, just like the TradFi markets. What's the Fed going to do? Yeah. That's the only thing that matters. So now we're just going to wait every day. We're going to see vols increase just before they release their sales figures or something, right? So that's what's doing. And that's what's kind of lame. It kind of bugs me. But whatever, it is what it is.
In the end, everything becomes communism.
Begins what?
Everything becomes communism in the end.
Communism, that's certainly, and then we got to shake it up and fix it, and then go through the whole process again. All right, hey, that's it for today's. We went a little bit over time. Sorry about that, but thanks again, everyone, for joining us. And of course, if you want to hang out with us live, check out roguetrader.academy. Until next Thursday, we'll see you then, and happy trading.
Cheers, guys.